GM. GM. So, higher time frame view. BTC, swing trade, looking for the next consolidation. So we got the bands crossing green, which is good. So that's now framing the directional bias. If you're for me, obviously I've mentioned already that my longer term spot bags, which have been accumulated all the way down here, I never sold them. I sold alts and swapped them back into BTC and some ETH. So I'm holding just the majors. But the way I would interpret this, if I wasn't long, if I didn't have spot bags, I would want to be spot long Bitcoin or alts or whatever the coins are that you're tracking when Bitcoin's bands are green. That's the simplest way to frame whether you should be holding spot or not in terms of trending daily, because it's not always going to precede the trend, but it precedes every trend. So what does that mean? So if you're swapping back into spot whenever it goes green over here, it wasn't the bottom, but you got out and closed them when it went red over here, right? You get in around 22.2, you may end up exiting probably around 21.2. So a slight loss. You go again, you go green here, goes red there. Goes green here, goes red there. Then goes green, boom, you catch the big trend. So you can obviously refine that more with other inputs of how to best determine when you should be spot long or when your portfolio should be predominantly spot rather than cash. And the green bands are always there throughout the major trends. So this could be the start of a new major trend, or maybe it's not. Maybe it pulls back, comes back down, and ends up having to go red once more. However, the goal is not to... You basically want to make it as simple as possible. So the simplest way of refining your bias on BTC would be green bands, daily, bullish. Also, this is in combination with taking out the range lows, reclaiming, so there's a false breakout, which can be a bullish sign. Also, it's broken above and held above a previous structure level, another bullish sign. So you've got a bullish market structure shift, which would mean that even if there is a pullback here, you'd expect that to get bought and go higher. So there's plenty of confluence there for being long. But I'm looking at what comes next from a 4-hour trend perspective. So that's the daily. Let's drop down to the 4-hour and we'll look at the 50, 100, 200. And what I'm looking at here is obviously the 50 gets above the 100 and above the 200. That's when you're back officially in a 4-hour uptrend, which hasn't happened yet. The 50 has climbed back above the 200, but we still have the 100 lower. So we're waiting for that extra cross to happen. Now, typically, when you see these moves, you will see the bands cross, but price can come down. I'll show it like in a couple of examples here just to give a rough idea. Price gets above, right, and the 50, the 100, the 200, they're not in full bullish formation yet. We have a rally up, it ends up pulling back, it forms a higher low, it goes below the bands, reclaims them once more, and then we get our 50, 100, 200 in line. And then it comes back, it drops below them once more, the bands even cross bearish, then they cross bullish again, and boom, away we go. And then the nice 4-hour trend rides for several weeks by the dips, by the retests, all the way up until the bands break. This happens over and over and over, and I think that the way Bitcoin will probably trend up into the highs will be if it breaks out. So if we do see a clean break, you might see immediate continuation if Bitcoin squeezes up, in which case we're looking at that value area high 69.70 as the point at which Bitcoin probably consolidates and pulls back. If that were to happen, you'd be watching the bands because they would cross bullish. You'd be watching for Bitcoin to actually consolidate and hold above them, where the bands come across in bullish formation and they hold. If not, if this area does act as resistance and BTC starts to pull back in here, I'd expect that it can actually fall below them and then reclaim them. And if that was the case, this dip below and then the reclaim of them, that area would be where you would see the bands getting into a bullish formation, and you'd be looking at the 4-hour trend to have completed with an attempt to go lower. It's always good to see the attempts to go lower, which is what I'd be waiting for. So I'd be looking at something like this, whether it's from here, whether it starts from higher. I'd be looking to see Bitcoin actually lose the 4-hour bands briefly and then reclaim them. Because that would achieve several things. It would fill in some of the inefficiency, so it has a pullback. It would give us a retest, right? Because people who are getting long up here get squeezed down into what is just a nice bullish retest, higher low forming. And then the reclaim of that is where you'd be looking at setting up those higher time frame swing longs. And if that was the case, if we dip down to 60, 61, 62, reclaim back up to 64, that would be a long, and the long would be targeting the highs. You'd be looking at all-time high from there. All right, and obviously you trade it along the way. And of course, if it turns into one of these bigger trends, you're looking at catching Bitcoin on a bigger move to 80 or maybe even 90. So that's what I'd be waiting for. That's what I am waiting for in terms of setting up swing trade. This typically, I'll show a breakdown of this later on in a study of all the different scenarios in which Bitcoin's daily 1221, so the green and red bands, the daily bands crossing bullish, plus the 4-hour bands, 50, 100, 200, how they interplay together, what to expect when one follows the other and vice versa, and then how to trade it, how to play it. Sets up better expectations, sets up a better trade. You have to be mindful that this could still just be a strong squeeze out and we drop right back down. That's not impossible yet. It's less likely, but I would rather see a pullback. A continuation from here is more likely to actually be a one-directional strong squeeze that leads to a distribution and a pullback all the way down. So the best thing, at least for me, that I could see for bulls from here would be consolidation in this area and a drop back. Because that would be like a nice bear trap. And people would say, oh, it's bearish, it was just a squeeze, blah, blah, blah. But we've broken structure, it's bullish. We've pulled back, that's bullish. It would only get bearish below 60, really below 59. And so for me, I'm waiting, patience. The bands have not crossed yet. Usually when they're about to cross, you see a pullback down into them. Because as the bands cross, people get confirmation for trend trades and they get long, but they get long probably at a bad area for low time frame, 65, 66. That probably turns out to be a decent entry on a higher time frame, but on a lower time frame, if you're trying to time it, you can often see a flush back down first, which can offer better entries. So I think that potential for a dip is one of the better things to wait on here. And I mean, we'll know this probably by tomorrow. By the end of tomorrow's session, by the end of Friday, we'll have an idea going into the weekend where Bitcoin is setting up. So that's how I'd be looking at it. You know, there's some like that was the Trump move there. The Trump pump was there, that impulse. Then we had the move into Sunday, Monday. We left behind some gaps, some inefficiency to fill. And I think those will get filled. Whether it happens from here or it happens from higher, I think they'll get filled and it will offer a better long entry if you're waiting for one. You know, similar, but it won't repeat. But we had this strong move up. We had a distribution. The market topped out, pulled all the way back, pulled back, consolidate before eventually moving higher. This next consolidation, whether it looks like this, which it won't, obviously, it'll look different. The next consolidation after this run up is what's going to be the most clear signal for how the market direction is going to develop. What you want to see is slow. After an impulse move up, you want to see slow correction, low volume, low impulse. Tries to go down. It should try to go down. That's important, is try to pull back, but is unable to. If it meets resistance on the way down, meaning it's struggling to go lower, struggling lower, it's a sign that you're seeing support come in, which is exactly what you want to see. The move up has been strong. What you want to see is on the retest, does it remain strong? Stock market has closed and confirmed a downtrend. So I mentioned this yesterday. Strong move down on the Nasdaq. This might be, so you've Nasdaq, you got S&P, which is stronger, and then you have the Russell, which is the lower caps, which is stronger again, right? So it's not necessarily a bearish thing, what we've seen here. This, to me, looks more like a rotation away from the big tech, you know, the leaders, into some of the lower caps, which is like a broadening out of the market, which can actually indicate more of a more of a risk-taking activity across the market as investors are starting to see, okay, we now believe that this is actually bull market. We now believe there is actually more upside ahead, and we're going to build positions and run up some of these lower caps. It's little bit like crypto. You have to be mindful, right? Whenever Bitcoin stops and then the altcoins start running, it can be a sign of a later stage rally. That's always important to note. But you're not seeing broad stock market weakness. You're actually seeing the Russell break out from a, 2-year consolidation after building a nice consolidation at the highs and breaking out from that, and it's pushing towards all-time highs. So that's not a bad thing by itself. If you're seeing stocks weak across the board, we have Nasdaq, S&P, and the low caps all showing weakness, that's a sign more of a proper reversal. So what I would guess is that we're seeing a rotation into some of these lower caps while the majors cool off for this very typical pre-election summer period where it can chop around. So I do think this goes lower and chops sideways. I don't think that has to be catastrophic for the markets. It would depend where it pulls back to, but there's plenty of room for this to pull back a lot deeper and still retain some kind of bullish structure. And if you look at the Nasdaq, like on the weekly, well above previous all-time high, broken out, held, retested, moved up. So, I don't think this time. You don't think you need to be pulling out the fucking 1929 fractal charts, which I've seen them again, by the way, on stock Twitter. People pulling out the 1929 charts, talking about the next Great Depression and massive crashes. And I don't see that. I think that the highest likelihood would be the markets remain elevated, dips get bought, and they remain strong until the election. And if Trump wins, probably until his inauguration. And I actually think then, if and when Trump gets in, that might be when you actually see the top. And you see some serious shift. But in almost every election year, post-election, you see a surge, regardless of who wins, as the uncertainty of the election is gone and we're moving into, something a bit more certain. So you're looking at November 2020. So August, September, October in 2020, markets pulled back sharp, sideways. Election went past, Biden won, boom, away they go. 2016, so this is when Trump won. So that was Biden winning, Democrats. But when Trump won, same thing. October, November, into December, boom, markets go up. 2012, same thing. Markets pulled back in March, markets pulled back in September, into the election. November, it bottoms out, starts to grind higher, into January, February, March, boom, up it goes. So it's very common for pullbacks into the election. It's also very common for a post-election rally of at least several weeks. And so I'd expect something similar. And crypto had obviously been much weaker leading into this. So it might just be a time for crypto to gain some relative strength. If you look at like BTC against the Nasdaq, you can see this here, right? Bitcoin, after having underperformed the Nasdaq significantly over the past several weeks, couple of months, it's now starting to strengthen again on a relative basis. So it might just be a rotation from some of the tech stocks into some of the higher beta, higher risk. So that'd be Bitcoin, that'd be lower cap stocks, that'd be crypto in general, and it might just be a standard rotation. You also have gold at all-time highs, which should be a good indication for BTC in general, right? As that kind of anti-fiat trade. And the dollar continues to show weakness, pretty much confirming this breakdown here, right? You've seen a BOS, so a break of structure on the weekly here, as this previous consolidation has broken with that last weekly close. The trend line is broken, it's rolling over, it looks like it's heading lower, and the closer Trump gets to being the president, the more that should roll off. As I talked about on Weekly Outlook, a weak dollar policy is something that Trump would be expected to run, which would be good in general for risk assets. And that's about it. Think about the Chinese yuan and the dollar. No, it's USD. It's this other way around. Yeah. I mentioned this a while back about how these big rotations on the Chinese yuan versus the dollar coincide with some of the biggest bull markets. So 2016-17 and 2020-2021. So these big declines in the dollar relative to the Chinese yuan come along with some of our biggest bull markets. So obviously we're not seeing that yet. That still needs to break down. And if it does start to break below this kind of 7.20 towards $7 range, you could see another one of these strong risk moves where people move out of the dollar in favor of other currencies and other assets. So mostly looks good. Waiting for BTC to show some 4-hour trend shift, right? 50, 100, 200. That will set up some good swing trades. GM, GM, GM.